Are you navigating the digital marketplace with your own online venture or considering diving into one? Taxation might seem daunting, but it's a crucial piece of the e-commerce puzzle. Fear not, because I've got you covered. In our upcoming video, we'll unravel the tax tangles of online businesses together. You'll learn savvy strategies to minimize your tax bills and steer clear of IRS headaches. Stay tuned. But before we get into that, make sure you hit the subscribe button and the bell icon to get notified of new videos like this one. I post weekly videos on topics related to online business, entrepreneurship, and personal finance. And if you find this video helpful, please give it a thumbs up and leave a comment below. I'd love to hear from you. Now, let's get started. The first thing you need to know is that online businesses are subject to the same tax rules as any other business. That means you have to report your income and expenses, pay taxes on your profits, and file the appropriate tax forms. Depending on your business structure, location, and activities, you may also have to deal with sales tax, self-employment tax, payroll tax, and other taxes. Sounds complicated, right? Well, don't worry. I'm going to break it down for you and give you some tips on how to handle your taxes as an online business owner. The first step is to choose the right business structure for your online business. This will affect how you pay taxes, how much taxes you pay, and what tax forms you need to file. There are 4 main types of business structures: sole proprietorship, partnership, corporation, and limited liability company, LLC. A sole proprietorship is the simplest and most common type of business structure for online businesses. It means you are the only owner and operator of your business, and you are personally responsible for all the income, expenses, and liabilities of your business. You report your business income and expenses on Schedule C of your personal tax return, Form 1040, and you pay taxes on your net profit at your individual tax rate. You also have to pay self-employment tax, which is a combination of Social Security and Medicare taxes on your net profit. The self-employment tax rate for 2024 is 15.3%. A partnership is similar to a sole proprietorship, except that you have one or more partners who share the ownership and operation of your business. You and your partners are personally responsible for all the income, expenses, and liabilities of your business. You report your share of the business income and expenses on Schedule K1 of Form 1065, and you pay taxes on your net profit at your individual tax rate. You also have to pay self-employment tax on your net profit. A corporation is a separate legal entity from you and your partners. It means your business has its own identity, rights, and obligations. You and your partners are shareholders of the corporation, and you are not personally liable for the income, expenses, and liabilities of your business. You report your share of the business income and expenses on Form 1120, and you pay taxes on your net profit at the corporate tax rate. The corporate tax rate for 2024 is 21%. You also have to pay yourself a reasonable salary as an employee of the corporation and withhold and pay payroll taxes on your salary. Payroll taxes include Social Security, Medicare, federal income, and state income taxes. The payroll tax rates vary depending on your income level and state. A limited liability company, LLC, is a hybrid type of business structure that combines the features of a corporation and a sole proprietorship or partnership. It means your business is a separate legal entity from you and your partners, but you can choose how you want to be taxed. You can elect to be taxed as a sole proprietorship, a partnership, or a corporation. You report your business income and expenses on the appropriate tax form, and you pay taxes on your net profit at the corresponding tax rate. You also have to pay self-employment tax or payroll tax, depending on your election. So, which business structure is best for your online business? Well, that depends on several factors, such as your income level, your risk tolerance, your growth potential, and your personal preferences. There is no one-size-fits-all answer, and you should consult a tax professional before making a decision. However, here are some general guidelines to help you choose. If you are just starting out, have a low income, and have minimal expenses and liabilities, a sole proprietorship may be the easiest and cheapest option for you. You don't have to register your business with the state, and you only have to file one tax form. However, you also have to pay self-employment tax, which can be a significant burden, and you have no protection from personal liability, which can be risky if your business gets sued or goes into debt. If you have a partner or plan to have one, a partnership may be a good option for you. You can share the ownership and operation of your business, and you only have to file one tax form. However, you also have to pay self-employment tax, and you have no protection from personal liability. You also have to deal with the potential issues of partnership disputes, profit sharing, and decision making. If you have a high income, a lot of expenses and liabilities, and a high growth potential, a corporation may be a better option for you. You can protect yourself from personal liability, and you can take advantage of various tax deductions and credits. However, you also have to register your business with the state, pay a filing fee, and file 2 tax forms. You also have to pay corporate tax, which can be double taxation if you also pay yourself a salary, and dividends. You also have to deal with the complexity and formality of running a corporation, such as having a board of directors, holding meetings, and keeping records. If you want the best of both worlds, an LLC may be the ideal option for you. You can protect yourself from personal liability, and you can choose how you want to be taxed. You can enjoy the simplicity and flexibility of a sole proprietorship or partnership, or the benefits and deductions of a corporation. However, you also have to register your business with the state, pay a filing fee, and file the appropriate tax form. You also have to pay self-employment tax or payroll tax, depending on your election. You also have to follow the state rules and regulations for LLCs, which may vary from state to state. As you can see, choosing the right business structure for your online business is not a simple task. It requires careful consideration and planning, and it can have a significant impact on your taxes and your business success. Therefore, I highly recommend you do your research, weigh the pros and cons, and consult a tax professional before making a decision. The second step is to keep track of your income and expenses for your online business. This is crucial for preparing your taxes as well as for managing your cash flow and profitability. You need to record and categorize every transaction related to your business, such as sales, fees, commissions, refunds, costs, purchases, subscriptions, and more. You also need to keep receipts, invoices, statements, and other documents that support your income and expenses. There are many tools and software that can help you with this task, such as QuickBooks, FreshBooks, Wave, Xero. These tools can help you automate and streamline your bookkeeping, generate reports, and integrate with other platforms, such as PayPal, Stripe, Shopify, and more. You can also hire a bookkeeper or an accountant to handle your books for you, but that will cost you more money. Keeping track of your income and expenses will help you determine your net profit which is your income minus your expenses. Your net profit is the amount that you have to pay taxes on. And it is also the amount that reflects your actual earnings from your online business. Therefore, you want to maximize your income and minimize your expenses as much as possible without compromising the quality and value of your products or services. So, these are the 3 steps that you need to follow to deal with taxes for your online business. Choose the right business structure, keep track of your income and expenses, and pay your taxes on time and in full. By following these steps, you can save money, avoid trouble, and grow your online business successfully. I hope you enjoyed this video and learned something valuable. If you did, please hit the like button and share this video with your friends. And if you have any questions or comments, please leave them below. I'd love to hear from you. And don't forget to subscribe to my channel and hit the bell icon to get notified of new videos like this one. I post weekly videos on topics related to online business, entrepreneurship, and personal finance. With that said, thanks for watching, and until next time.